Hello everyone, Wealthy Eddie over here. Welcome to another YouTube video. Today I am going to show you step by step how I used the Judas swing to make 12k on my funded account. Let's get straight to it. What's up everyone, Wealthy Eddie over here. Welcome to another YouTube video. Today I'm going to be breaking down the Judas swing and how by applying this model I managed to make £12,000 using a 200k funded account. Let's get straight into it. So what is the Judas swing? The Judas swing is essentially a false move sweeping some sort of liquidity to then head into the opposite direction. So here we have two examples. We've got the buy example. So the Judas swing happens when Asia session finishes and the beginning of London session starts. So what you want to do is for a buy example, you want the Asian low to be swept, as this is liquidity being swept, sell side liquidity. Okay, so as you can see from this example here, we had the sell side liquidity being swept. We then had a market structure shift, which then left behind an imbalance, a fair value gap, and this is where we would take our buy from. We would take our buy from this level, stop loss at the swing low, and then you could aim for Asian highs, or you could just aim for a 1 to 2 consistently. Okay, and this would be your example right here for a buy. On the sell example, it's the exact same thing, but the opposite. So you want the Asian high to be swept. As you can see, we have swept Asian highs. We then have had a market structure shift, imbalance left behind, fair value gap. We take it from the start of the fair value gap, stop loss at the swing high, sorry. And then TP would be at the 2%. Okay, again, you can aim for extra, but I just always aim for 1 to 2, as the win rate is considerably higher if you head for a 1 to 2. So now that you guys already know the buy example, this is what you want to look for when you're looking for buys. This is what you want to look for when you're looking for sells. Now let's head over to last week's, how the Judas swing performed last week. Okay, Mondays and Fridays I tend to avoid. I don't really trade on Mondays. I don't really trade on Fridays using the Judas swing. It's from Tuesday, Wednesday, and Thursday. Those are the main days that I take. So if we can see here, we can see I've got my Asian highs and Asian lows marked up right over here. And if you guys remember the buy model, we are waiting for Asian low to be swept. As you can see here, Asia low has been swept right over here. We had Asia low being swept. We had a market structure shift, okay? Left behind an imbalance. We took our trade from the imbalance, stop loss at the swing low, aimed for 2%. This was my first 2% for the day on Euro USD, 2% on Tuesday. So we're 2% up. We then head over to Wednesday. Wednesday, we had the exact same thing happening, okay? The exact same thing. We had Asia low being swept right over here. Okay, we had a market structure shift right over here. Left behind an imbalance, take the trade from the imbalance, stop loss, placed it at the swing low right over here. I didn't take into account this huge wick, as this wick is just sweeping more liquidity. So I want to find the area where I am rejecting the most, and the area is right over here. Just because one wick went all the way down, I don't want to then go ahead and place my stop loss at this level, because then it's going to affect my risk to reward. Sometimes that may mean that I might lose a trade, but majority of the times, this is where I would win a trade when someone would lose the trade. For example, if you were to place your stop loss at this wick, you wouldn't have done a 1 to 2, you would have ended up losing the trade. So that is why I always pay attention to where the market is rejecting most. And that's where I place my stop loss, because that's where I don't want to see the market break below. So here, another 2%. So that brings me up to 4% for the week on Wednesday. We then head over to Thursday, which was the last trading day for me, for this model. On Thursday, we had the same exact thing, okay? We had Asian high being swept, as you can see right over here, by this huge wick. This was news, okay? We then had a market structure shift right over here, left behind an imbalance, and the same thing as the trade before. Just because of this wick right here, I do not want to go ahead and place my stop loss all the way up there. because then it's going to affect my risk to reward a lot. Okay, even though we would still win this trade, but as you saw on the previous trade, you would have lost. So I want to find where's the market really been rejecting, and really and truly, I just want to look at this area right here, because if it wasn't for news, the market would just reverse around about this area right here. So that is why I ended up placing my stop loss, which was at this high right there. And as you can see, we ended up coming back, hit the imbalance, hit another 1 to 2. That was my last 2% trade for that week. So that was a 6% trading week on a 200K account. That is £12,000. Okay, I'm in the UK, so I'm in pounds. If you're in the US or any other countries, it will be whatever the currency is there. If you're in the US, then it's obviously going to be $12,000. But with me, I'm in the UK, so I have a 200K funded account. I managed to make 6% last week, so that calculates to £12,000. Very, very simple model, guys. Keep it simple. That is the best thing. Okay, exact same as the examples right here. As you can see, the sell example, we had Asian highs being swept. We then had a market structure shift, left behind an imbalance. We take it from the imbalance, stop loss at the swing high, TP 1 to 2. If you look over here, same exact thing. We got Asia highs, Asia lows. Asian high got swept, market structure shift, break of structure, take the trade, TP hit. Okay, market structure shift, break of structure even lower, imbalance, straight. Okay, you don't necessarily need a break of structure. You can just have a market structure shift, fair value gap, take it off the imbalance, stop loss at the swing high or rejection level. Again, please, please, please do not do a trade like this where your risk to reward is 1 to 0.8. Don't do that, because you're not going to see consistent profit. You'll end up losing a trade, and then it takes 2 trades for you to make it back. With me, I always risk 1%. So if I were to lose this trade, my next trade, I would make that back plus an extra 1%. Okay, so make sure that your risk to reward is always at a 1 to 2. Okay, always minimum you should be aiming for is a 1 to 2, not even a 1 to 1. Because with a 1 to 2, you only need a 34% win rate and you're not losing any money. Okay, and with the Judas swing, it is anywhere between 75 to 80% win rate. So you're more than double than what you need to be profitable. So you shouldn't worry if you lose a trade here and there. Okay, so hope you guys enjoyed this quick video, quick explanation of the Judas swing. Okay, very, very easy. Again, buy example, sell example, very simple, very mechanical strategy, where if this happens, you move on. If it doesn't happen, then sometimes you might not even have a trade on that day. Okay, so hopefully you guys enjoyed this video. Hopefully it was helpful. If you guys do have any questions on the strategy, or you have anything that confuses you, make sure you drop a comment